Candlestick investors have a major advantage by being able to analyze what's happening in a trend. As we can see in the Dow, the uptrend has been consistent and it's never been able to close back below the T-line. So this steady uptrend allows for the participation in not only uptrending stocks, but stocks that have huge upside advantages. The recommendation to get into Juno last week was very simple. We had a fry pan bottom. And then we had what we call a bullish flutter kicker. Notice how it opened here, closed here, bearish. Next day they gapped it up above the previous day's open and did a doji. That showed you there was some strength. And we have a very simple rule of the doji. It's usually going to move in the direction of how they open after a doji, which meant if it opened positive, you could be buying immediately, because if this is going to move positive, if you took out this little flutter out of your bullish flutter kicker signal, you basically have a kicker signal. It puts you in situations where, are you always going to get a huge move like this? Definitely not. But candlestick analysis puts you in situations where the probabilities of being in big price moves are greatly in your favor. So trying to identify which sectors are going to move the strongest, you can analyze the raw futures as well as you can analyze stock prices. Remember, candlestick analysis is not the analysis of any specific market. It's the analysis of what is going on between the bulls and the bears based upon investor sentiment. The investor sentiment that has produced signals that Japanese rice traders have identified over the last 400 years. For example, if you were trading crude oil, there were your sell signals in the overbought area. It was time to close out any long crude oil trades. Down here you have a Morningstar signal in the oversold area, right smack dab off the 50-day moving average with a close back up above the T-line. What that tells us about trading crude oil? Told us we could stay long until we see a sell signal and a close back below the T-line. Right now, crude oil is at a couple-year high, back up into the $57 range on a big move today, which is also moving the crude oil stocks. Our recent buy recommendation on Bass Oil, BAS, was based upon a Morningstar signal and a close above the T-line. How long do we hold it? Until you see a sell signal and a close back below the T-line. Now with the caveat that the further away you move from the T-line, the higher the probability they could come back and test it. So we're still long, but because we're that far away from the T-line, we start watching for profit taking. Our recommendation on RES, another crude oil company. Morningstar signal, smack dab off the 50, a close above the T-line. Nothing to tell you there's any change of investor sentiment. And Whiting Oil, WLL, a Morningstar type signal right off the 50-day moving average. Where was the first target? The 200-day moving average, which is exactly where it closed today. Now what's our analysis? Well, we've moved pretty far away from the T-line. We're right here at the 200. If it opens lower tomorrow, we take profits. If it opens above or trades above the 200, we stay long, but we stay long until we see a sell signal. Candlestick analysis is merely the graphic depiction of what's going on in investor sentiment and produces situations where the probabilities are not only in your favor of being in an uptrend, but quite often in a very strong uptrend. That'll be it. We'll see you in the chat rooms.